Welcome to The Explainer. Today we're talking about copper. And I know what you might be thinking. Copper? But believe me, this isn't just some boring industrial metal anymore. It's actually becoming one of the most critical, most strategic assets for our future. We're going to break down exactly why. So why the sudden change? Why is this common, everyday metal suddenly so important? Well, the answer really gets to the heart of a massive shift in our global economy, and it's all being driven by two absolute juggernauts: the AI revolution and the huge push for green energy. All right, here's how we're going to tackle this. We'll start with how copper's role is changing, then we'll get into the price forecasts, the looming supply gap, the huge forces like AI driving demand, a couple of different scenarios, and finally, what this all means, the great copper bet. Okay, first up, let's really get our heads around this fundamental shift in how we think about copper. And really, this isn't a small tweak. It's a total rewrite of its job description for the global economy. For years, people called copper Dr. Copper. Why? Because it was so good at predicting economic health. If copper prices were up, it usually meant construction and manufacturing were booming. It had a PhD in economics, basically. But that's the old way of thinking. Now, the new view is totally different. It's not just an indicator anymore, it's a critical ingredient, absolutely essential for building the entire technological backbone of our modern world. We're talking AI, electric vehicles, the whole shebang.
All right, so if copper is so important now, what does that mean for its price? Let's take a look at what the big banks and analysts are forecasting. And this is where things get really fascinating, because you've got this short-term choppiness clashing with a really powerful long-term trend.
Okay, check out these numbers. What you see right away is that while nobody agrees on the exact price, they all agree on the general story. See that dip around 2027? Almost everyone is calling for that. But then look what happens after, a steady climb up through 2029. You've got Goldman on the more cautious side, and then you have someone like Citigroup who thinks we could blow past $15,000 a ton. But the big picture, the really important takeaway here, is that upward trajectory. Everyone sees it coming. Yeah, analysts have a name for this pattern. They call it a valley and ascent. It basically means we're in for a bumpy ride for the next couple of years. Things like trade policy and interest rates will probably make the market jump around a bit, but after we get through that valley, the real story kicks in. The pure physical demand for the metal is expected to just take over and drive prices steadily higher. And that brings us to the absolute heart of the matter. This is the central conflict in the whole copper story. We're looking at a huge and probably inevitable gap between how much copper we desperately need and how much we can physically pull out of the ground. This chart puts the problem in really simple terms. Take 2028, for example. Demand is expected to be growing at 2.6%. But production? It's lagging behind at just 1.9%. Now, I know, that doesn't sound like a massive difference, right? But you have to remember the scale we're talking about here. This is millions and millions of tons. That small percentage gap translates into a huge physical shortfall and puts incredible pressure on the market. And here's what that pressure looks like in cold, hard numbers. In 2026, the market is expected to be short by 150,000 tons. Fast forward just 3 years to 2029, and that deficit explodes to 800,000 tons. That's more than a 5-fold increase in the shortfall in just 4 years. When you have a gap that big, you get something called price rationing, which is a fancy way of saying prices have to go so high that they force some people to stop buying. So you're probably asking, why can't we just mine more? Well, here's the problem. 17 years. That's how long it takes, on average, from finding a new copper deposit to actually getting a mine up and running. It's not like you can just flip a switch when demand spikes. The geology and engineering just don't work that fast. Okay, so what are the exact forces creating this, historic imbalance? It's really a perfect storm, a mix of unstoppable demand from technology meeting some very real, very stubborn constraints on the supply side. Let's break that down. On the demand side, you've got AI and data centers. They need a ton of copper for power and cooling, and their demand is what we call inelastic. Basically, they have to build these things so they'll pay whatever the price is. Then you have the whole green energy transition. EVs, solar panels, upgrading the power grid, all of it is incredibly copper intensive. And then on the supply side, you've got geopolitics throwing a wrench in the works, like potential US tariffs messing with trade flows. And at the same time, miners are dealing with the tough reality. The quality of copper ore is declining, and there just aren't enough new, big projects in the pipeline. And what's really interesting is how these drivers change over time. If you look at this table, you'll see that right now, in the short term, things like US tariffs or the health of China's real estate market are huge factors. But look out towards 2029. Their impact starts to fade. The things that become absolutely critical are the big structural forces, that nonstop demand from AI, and the very real limits on getting more supply out of the ground.
All right, so we've got all these powerful forces pushing and pulling on the market. But how could this all actually play out? The forecast we just saw is the base case, but it's super important to look at other possibilities, the alternate timelines, if you will. Right. So what if the consensus is just wrong? That base case seems pretty solid, but it's built on a whole bunch of assumptions. What happens if AI demand is way bigger than we think? Or what if the global economy takes a nosedive? This table gives us a great snapshot of that range. The base case we've been talking about puts the price around $13,650 by 2029. But then you have the bullish scenario. This is a world where AI demand goes into overdrive right as a couple of major mines have problems, and boom, you could see prices spike to $18,500. On the flip side, the bearish case imagines a major global recession, or maybe a big breakthrough in a substitute material, which could knock the price back down to around $10,500. So let's put that another way. The bull case is basically a mad scramble for physical copper. It's a scenario where there's just not enough to go around, and the price has to rocket up high enough to literally destroy demand, to force companies to cancel projects. The bear case is the opposite. A weak economy and new technologies mean we just don't need as much copper. So really, each of these scenarios is just a different answer to one huge question. Will our technological ambitions outrun the health of the global economy? And that brings us to the final and maybe the most important takeaway from all of this. It's the central idea, the core conflict that's really going to define the copper market for years to come. When you boil it all down, the future of copper is a clash between two completely different clocks. On one side, you have the world of technology, AI, electric cars, the green grid. That world moves at the speed of light, at the speed of code. On the other side, you have the slow, patient, physical world of mining, a world that moves at the speed of geology, governed by those 17-year lead times, environmental regulations, and just the sheer difficulty of digging stuff out of the earth. These two clocks are totally out of sync. And this quote just nails it. The whole thing is a bet. It's a bet on the physical impossibility of having this super-fast tech revolution without an equally fast mining revolution to support it. And right now, that's just not happening. It's a bet that our dreams of a high-tech, green future are moving way faster than our ability to supply the raw materials to build it. As long as software continues to outpace geology, that upward pressure on copper isn't going anywhere. So the big question is, something has to give. Which one will it be? And of course, just a quick reminder that this content is for informational purposes only and isn't investment advice. All the analysis is based on publicly available sources as of February 10th, 2026. Thanks for joining us for this explainer.